All right, so we'll begin with our session 3. Just keep this session short.
Yeah.
All right, so I think last time we didn't have much time to cover this, but uh, so we'll start with support and resistance. I'll skim through this. What exactly is a support and what exactly is a resistance, and how we can practically see it in our charts. So we can just pick up a couple of charts and see what this support and resistance looks like. So basically, a support is a low point. If you were to just look at a room, you have floor, that's the base, and then you have a ceiling. So the floor in a room is the lowest point, and ceiling is the highest point. So basically, in a simpler terms, support is the floor and resistance is the ceiling. So a low point or floor at which the security or any stock does not fall over a period. So it can be drawn by like a single straight line, or we can use indicators. Um, Generally, like, Fibonacci retracement levels indicate support and resistance. We'll get to it and look at the chart. How to actually draw a Fibonacci retracement and what exactly it is. So basically, a trader likes to long. Long means like, buy a security at a support level. Why? Because support level is the lowest point at which the security does not fall over a period. So it's just kind of a recurring touch and go. So it's taking a support, going up, coming back, taking the support and moving up again. So basically, when it goes up, people short it, they sell it. So it becomes bearish, it goes down, takes the support. So people think, okay, this is the lowest point, this is the floor level. So let us buy the security. Once they start buying, the volume increases, so does the security or the stock price. So this is basically the support is an entry point for a security. And we'll look at the chart and see why. So let's go to our chart analysis. For a minute, just forget about these Fibonacci retracement. Or I can just go to the S&P features. Let me just delete. Right, so I deleted the retracement, so just to avoid the confusion. All right, so let us just look at here. All right. So if I just draw a line here, draw another line. Zoom in here. So for this period, like from July 6th to, let's say, July 14th. So over this period, this point is basically acting like a support. So the security moves up and it comes down to the support level, takes the support, moves up again, hits the resistance, can't go up, comes back again, moves up, can't break through this resistance line. Again, it comes down. It's not even breaking through this support point as well. Then it goes up, it shoots up, breaks through the resistance, and then it moves along. It's basically support, as I said, it's a floor and high point or ceiling at which the security did not break through over a period. That's what basically a resistance is. It's basically a opposite of support. And usually that's an exit point for traders. That's when they like to sell their trade, make the profit, and move away. So a trader kind of likes to short the security at resistance level. Usually it's drawn by trend lines, which we just drew. We just kind of drew the lines, the lowest points over a period, the highest points over a period to show the support and the resistance level. One key thing we need to understand out of the support and resistance is basically it's a opportunity if the price breaches support / resistance. Why is that? Security kind of, or the stock price, or the S&P 500 that we're looking at kind of breached through this resistance here. When it did the breach here, look at, it was here at 3188. Did the breach and jumped to 3217. So whenever it does that breach, if it breaches here below the support level, then basically that's like a buy or a sell signal. So it's a pretty good trading opportunity there. Any question on the support and resistance? No?
So for support, always we are seeing for a Fibonacci series, this one, based on that, or how it is?
Yeah, I'll get to it in a moment. Just wanted to just define the support and resistance in a simpler term before we get into the Fibonacci numbers and ratios and stuff.
Okay, sure.
Nasdaq mini futures. All right, let's go back directly to the so coming to Fibonacci numbers, as Shamrez was saying. So Fibonacci numbers are used to create technical indicators using sequence. And generally that sequence, as I said earlier, is 0, 1, and then you kind of just add 0, 1, it becomes 1, you add 1 and 1, it becomes 2, you add 1 and 2, it becomes 3, so on and so forth. And basically sequence can be used for ratios, which kind of gives a direction of the market for some technical traders. It's not really an established direction, but some technical traders do consider these ratios to kind of like give us a direction where the market is heading. And also technical traders kind of use the common Fibonacci ratios / percentages. And you'll see it in a moment what I'm talking about. Generally, these ratios that you see are the percentages. These are based on the common Fibonacci ratios based on this Fibonacci sequence that you see here. that leads us to actually the Fibonacci retracement. So again, the point of starting with the support and resistance in a simpler term is to kind of get to this point. The Fibonacci retracement is kind of indicates the support and resistance. This gives a pretty good idea or understanding. I mean, for the support, you can look at a period and see, you know, let's say, for example, if the stock is has been trading at, you know, at like $60 for a period of 10 days or so. It's coming to $60, moving up to $80, coming back again to 59, moving again to 78 or something. So it does it, let's say, for a week or two. So basically that $60 becomes kind of a support. So if a person goes into trade, that support forms a basis for him, like, you know, whenever it hits that support, based on that historical information, he can say, hey, it's a buy signal for me now. And when it peaks and hits the resistance, let's say 85, goes beyond 80, then it's a pretty good signal for him to kind of sell. He bought it at 60, he's selling it at 85, you know. So, and these retracement, again, these are based on the Fibonacci numbers, and each support and resistance is kind of shown by a certain percentage. And Fibonacci levels, or these retracement levels, from 0 to 100% are extension lines beyond 100%. And we can draw or retrace it by connecting 2 points, usually a high and low point. In the recent historical point, whatever the high or the low point was, swing high or swing low points, you know. And common ratios, as we just saw, it's 23.6, 38.2. Generally 50 is not a Fibonacci level, but it kind of gets included in there. And I'll show you in a minute what you can check the boxes to show which percentage you want to see it on your Fibonacci retracement. So 61.8 and 78.6. And again, these, just relying on these levels is kind of dangerous. So I highly recommend that we don't just rely on that. And shouldn't be considered like an all-time support and resistance level. Go back to the chart. We're looking at S&P 500, right? Actually, I'm in the features. SPX, the index itself. So I kind of zoomed out to see this index. So here, right, in March, we have this highest point of 338 or 336.2, right? The lowest was around here, right? So that was 2237. So just basically historical low or high point. So on your trading view, come to this, you click on the small arrow that you see, Gann and Fibonacci tools, go to Fibonacci retracement. The short key is Alt plus F. If you do that, the Fibonacci retracement. So just kind of select the highest point. I'm just kind of eyeballing it. Click on the highest point. Kind of like, you know, go to the lowest one. So once you do that, it kind of shows these. Right click here, just slightly. So generally, if you're in a candle chart, it doesn't kind of give you that much of a good idea as compared to a line chart. So if you're in a line chart, you can eyeball it and be as close as possible to the high and the low point. So once you do that, so you can see the levels here, the same percentages. That I just showed you 23.6, 38.2, 50, 61, 78.6. And if you don't want certain percentages or you want to turn it off, you click on it, right click, go to the settings, you see the values here. So if I check, if I turn it off, then this level turns off. You see in the background, those levels are turning on and off. So if you want to take this 23.6 or maybe this 50, you can turn it on and off. If you want to go beyond, if you want to go like beyond 100, like with this one, these are extension lines beyond 1. So those extension lines kind of like, if you want to get a understanding of future levels and stuff, then you can turn it on and off. You can hardly see it, it's slightly here. So any changes you want to do, click on it, right click, go to settings, you can change it, and you can do these levels in persons. Instead of persons, you can go to the values, and where you want these labels to be shown. You want the labels to be shown on the right, be shown on the left, it's on the left. If you want to be shown on the right, as you're closer to the current price, that's what it is. Basically, so this coordinate is basically this high point of 3396.7. If you want, because I was eyeballing it, if you want to be exactly and precise, what you can do is move on the right side, come on the candle, and see what that highest point is. Highest point is 3393.5. Click on it, right click setting, it's 3395. 3393.5. Go back. 935. Okay, just automatically. Now I go to the lowest point here. Says, let's say the closing, right? 2237.4. 2237.4. 2237. This one also should just do it to close 3346.2. Fine. Hit OK. So it's perfectly present. You see that? So right at the closing. It's not at the wick line, the lowest point, and neither here on this. So you see, we did it at the close here, and also we did it at the close at the top. So if I go to the right side here, so look at this. So the price is kind of like fluctuating. It hit the resistance here, 100%. 3386.2. Then it was there taking this support. Generally, when it hits, it doesn't shoot up. If you look at here, look at that 61.8, place around this ceiling, and then this becomes the new support. Then this becomes the ceiling, the resistance. It shoots up, comes back again, takes the support, and then goes around, shoots up, takes the support, and then shoots up again, and this becomes the new resistance slash ceiling. And then it goes up, so it goes sideways here, consolidating. So this sideways movement in the market, the mentor keeps on saying the same thing over and over, that this sideways movement of, like, the new resistance becoming the support, it's a good sign. You don't want the stock market or an index to kind of like shoot up, 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 up. Then when it does the correction, then there will be a significant downtrend. But if it does hit the ceiling, consolidates here, then moves up, makes this as a support, and this becomes a ceiling. Then consolidates, moves up, it's lingering around here, then it's going back, taking support, and then coming back to the same ceiling that we dropped from. So any questions on the retracement, how to draw?
So we missed, you were saying about the sideways.
The sideways consolidation, the technical traders, they like to see the sideways consolidation. You don't want the index or the stock, the security to kind of just shoot up, up, up. If it's shoots up pretty quickly, then it will come down crashing. So we want it to consolidate sideways, take support, move up to the new ceiling, take support, move up. Then we had the correction, then it's coming back again, taking this support. So if you want to see the same thing, features on NASDAQ. So if you look at this, took the support, consolidated sideways, went up, hit the ceiling, you see. So when it hits the ceiling, this Fibonacci retracements kind of give you that clear understanding. Look at this, zooming in here. So you see this? It's kind of just stuck between these two. Then it consolidates, shoots beyond the resistance, goes up, consolidates a bit more, makes this as a support, and the next ceiling is this, then shoots up. So when shooting up after a period, look at this. It was over a period stuck in this, right? From July 7 to, let's say, 31st July, almost like 20 days. So when it shoots up beyond this resistance level, that's a pretty good buying opportunity, right? When it shoots up, it consolidates at this support, or it moves further up. Goes up, correction takes place, but it doesn't suddenly just collapses. It takes the support here, it lingers around here, it comes down here because it's not like much room here. Takes this support again, this acts as a ceiling. So look at this number, September 4th, it's still within this, October 1st. So what do you think? If everything fares well, not much, crazy news and stuff. Whatever it did here, do you see a similar pattern here? So if it does the side movement, consolidates, and this gives us an opportunity. It hits this resistance and shoots up, breaking this resistance. It's a pretty good buying opportunity. But if it does the opposite, it's taking support here, it will fall back to this, it becomes the next support, so on and so forth. Then this becomes the next support. Same thing. If it's shooting up, this becomes, before it shoots up, this becomes a resistance, then this becomes the next resistance. So do you guys get a good picture of what these support and resistance levels and what the Fibonacci retracement can do to kind of give us an entry and exit points, basically. And when it consolidates enough, that gives us a good opportunity, either to buy or to sell. Again, it's just like kind of dangerous to just rely on these support and resistance level. Should rely on the other indicators that we discussed in the last sessions and stuff. So go back to the line chart. So the line chart is about the pulse moving 21-day period. RSI is moving up. MACD is moving. So the MACD, the blue line, just crossed the signal line and it's showing the upward trend. Any questions on that? All right, so we have 7 more minutes. So let me jump to the tops and bottoms. What's the importance of this? So if there is a double top and double bottoms, like when the stock or the security trades to a resistance and support level 2 times in a short period or 3 times in a short period for triple tops and triple bottoms, that kind of like, gives us a good idea or signal. Momentum above a top level, it continues double top or double bottom, double top or triple top, gives us a good buy signal. If the momentum is below a double bottom or a triple bottom, that kind of gives us a pretty good sell signal. Why I'm saying that, go back to this again. So if you look at, let's just look at these two, right? So it goes up, hits the resistance, right? Again, the line chart, then comes back down, takes the support, goes back up. So this is a double top in a short period, 2 consecutive tops or 3 consecutive tops is a bearish signal. It's a sell signal. Because after 2 tops, it comes down. After 3 tops, it comes down as well. So vice versa, if you look at bottom, if you look at 2 bottoms in a consecutive time frame, or consecutive 2 bottoms in a short time frame, I would say, then that's a bullish signal, right? Right after these 2 bottom, what happened? It shot up, hit the resistance, came back. Then it became 3 bottoms. That again is another bullish signal. But if I were to just look at these 2 bottoms, consecutive time frame here, again it shot up, but it did not go back. Generally, why it happens is, a simple analogy is, when it shoots up, people sell at this point. So it becomes a bearish downtrend. So it starts coming down, hits the support, and also whether it be a double bottom or a triple bottom, it's a bullish signal. Then what happens is people start buying, and the volume increases, so does the stock price. So it's a simple concept. Let's quickly look at NVIDIA and see. So support level was 485. You see, from 8th September till 23rd September, right? Roughly like what, 15 days? So see, it hit like 472 or 3, then it shot up, came back down, double bottom, then it shot up. So this is like double top, came back down again, formed a triple bottom, shot up again. So look at this. If somebody looks at here, right? If I'm here, let's say, I'm looking at this support of 485. Wouldn't it be wise for me to just buy the security when it hits 485? And it's going up and hitting this 421 or so. So doesn't it, like, make sense that, that this become a resistance or whatever the Fibonacci retracement is? So this would be a simpler way of getting in, buying it. And this kind of becomes my sell point, or I can look at the other indicators. As you see, MACD is just crossing the signal line, and even RSI shows uptrend. Even the pulse moving average kind of shows an uptrend. The price chart kind of is above the pulse moving average. So whenever it shoots beyond this resistance point, that's a strong indicator for me for an uptrend, along with these 3 other indicators. Does it make sense? So when it moves up, it may make this as its support level, the future support, that this could become the new resistance, or it can take support or dive back.
Should we look at the immediate support, or can we also see the 52 weeks high and decide that it might break the further supports?
It's generally people look at that too, but what I look at is the Fibonacci retracement, these immediate ones, and this is also based on the historical, right? It's not like 52 weeks. I kind of drew these retracement based on these high-low points from March, right? So this was what, Feb, this was like March. So let's say I'm like what, like 6-7 months back. Still based on the historical numbers, right? So the highest and the lowest point, the